All these people pretending to know what they're talking about. I'm getting
sick and tired
of people drawing random lines on charts. Who says that the 100-day moving average is the best to determine whether or not we go up or down in the Bitcoin price? Why does it have to be the 200-day moving average? Why not the 100-day moving average? Why not the 50-day? And who says it has to be a simple moving average? Why not take the exponential moving average? These choices are so arbitrary. And how can something that's been selected so arbitrarily be useful to generate buying and selling signals, to decide how to time the market? This channel started with the thesis to bring objectivity into analysis. You don't just want to randomly believe. You want to instead quantifiably test. And so again, I did just this. I did 1,200 back tests to find out what's the best moving average for Bitcoin historically. How well does it actually work to use moving averages to time the market? Is this an approach that works in general if you also look at trading fees? So we've got in this backtest 0.2% trading fees for each buy and sell. This chart here looks quite daunting, but bear with me, it's not that hard to understand. What we've got here on the x-axis is the duration of the moving average. What we've got on the y-axis is the annualized return. And the strategy is simple. We buy whenever the price is above the moving average. We sell or bet on falling prices whenever the price is below the moving average. So we would be short over here, bet on falling prices. We would be long over here, betting on rising prices. What's the best duration? Is it 50-day? Is it 200-day? That's the question answered in this chart. A backtest from 1 day moving average, which is just yesterday's price, all the way to 200 days moving average. In black, we've got a reference point, buying and holding. Bitcoin would have generated 130% per annum if we just bought and held it over the entire period. Now, what's the entire period? It's the BLX chart. It's the longest price history I could get on TradingView, which starts when Bitcoin was just 8 cents. In July of 2010. Had you bought over here and had you sold today, you're looking at 130% compounded annualized return. But look at the backtest results, right? Most of those moving averages actually outperformed buying and holding. Isn't that fascinating? If you don't get too short with your moving average, if you go above, say, 30 or 35 days, you tend to do much better than buying and holding every year. This year is the best moving average. A simple moving average, the duration is 45 days. So in white, we've got the Bitcoin price. It's the same chart as this green one here. And in turquoise, we've got the return of the backtest. Look how the backtest has way less drawdowns, right? We even make money sometimes when Bitcoin is crashing because we're betting on falling prices here, right? Look at this point in time. The minor capitulation, the 50% drop in 2018, for example, or here, the Corona crash. We also had been betting on falling prices here. This is a logarithmic scale, so those are 10x's from one another, and this is the delta. The delta is more than 10x over this time, right? Maybe 15, 20x more by trading according to that moving average. But why do I like this so much? I like this so much because it tends to work for a lot of moving averages. You don't have to necessarily take the 45-day. You could also take the 100-day. You'd still be better off after fees compared to buying and holding. Now, why do I present these numbers again? It's because there was a request in the premium chat. So one of the premium members of this channel said, can you rerun the numbers for different time frames? Because probably Bitcoin didn't behave the same when it was just a few cents compared to today, right? The psychology of the market is very different. And there is a real case to be made here. I've got 2 more time frames. And the results are not the same. Let's take away those very early days of Bitcoin's history. Instead of using BLX, we use BTC USD. Here the history starts in August of 2011 and Bitcoin's price was at around $10. $10, $11, not just 8 cents. What's the best moving average during this time frame? Here's the result. Again, we look at the simple moving average in turquoise and the exponential moving average in red. The simple moving average outperforms the exponential moving average. The 45-day is still okay, but there's a better moving average now. Right, here's the 45-day, but this moving average here tends to be better. It's the 122-day simple moving average. And note how most of the alpha, most of the outperformance was generated in the recent past. In other words, there had been a change in the psychology of the market. It looks like what was a very short-term, very volatile asset for traders in the early days became a more long-term investment for the later days. So as time progresses, as volatility decreases, the duration of our moving average also has to lengthen in order to reflect that. Let's look at the truly recent past. We only have the last 1.5 cycles or so. We've got the run up to 20k, then the crypto winter to 3.5k, then the next run up to 69k, and then of course the winter we are currently in. What's the best moving average here if we just look at that data? The longer duration moving averages outperformed even more. Here's the best one. It's the 120-day. This is how the alpha, the outperformance over buying and holding looks like. So the trend continues. It used to be a short-term moving average, then a medium-term moving average became slightly better, and now those medium-term moving averages are even better. So the 120-day simple moving average looks pretty solid. Again, the simple moving average outperforms the exponential moving average. So we are taking out all of that marginal guesswork. We take the moving average that historically reflected the market psychology the best. And what we see here on the left is that 120-day simple moving average. So you simply go to tradingview.com, you add a moving average, and then you change the length to 120 days, meaning we are currently rather bearish. We should be betting on falling prices. And this would only turn around when Bitcoin closes a day, UTC time zone, above 28,000 US dollars. We need another rally of 7% roughly. Don't fall victim to arbitrary number picking. Instead, join our Telegram. Link is down below.